We are now going to look at a couple of examples so that you can see how risk could be examined. So let's start with example 1. Jupiter Limited manufactures and sells computer equipment. The company imports parts from China and 80% of their sales are on credit. So remember, what you're going to do is you are going to read through the information provided and you are going to identify positive and negative factors. So we've got 2 negative factors over here. The company imports parts from China, so that could expose them to currency risk. And in addition to that, 80% of their sales are on credit, so that exposes them to credit risk. Jupiter has a significant amount of debt in their capital structure. So if they have a significant amount of debt in their capital structure, that is going to expose them to financial risk. Then if we look at the required, describe the reasons why Jupiter Limited may consider this a key risk factor. So why are the following risks? Why is credit risk and currency risk a risk for Jupiter Limited? Now please note, in this example, you don't need to identify the risk. The risks have been identified for you. They are telling you that the company considers credit risk and currency risk a risk. They've identified the risk. You now need to explain the reason why they would be exposed to this risk. So please note, you'll see as we go through example 2 and example 3, risk can be tested in a lot of different ways. So in example 1, you don't need to identify the risk. The risks have been identified for you. You just need to explain why they are risks. So if we look at the suggested solution, first we need to explain why credit risk is a risk for Jupiter Limited. So if you go back to the information provided in the question, we saw that 80% of their sales are on credit, and that exposes them to credit risk. So a significant portion of their revenue is derived from credit sales. Now that comes directly from the question. However, please note that is not going to score you any marks. You can't just state what you've been given in the question. You need to explain why it is a risk. So your marks are going to lie in the explanation. So this exposes the company to credit risk because if debtors do not settle their accounts, it could have a negative impact on profitability because of increased bad debts and the liquidity of the business. So if debtors don't settle their accounts, how will it impact on profitability negatively? Because obviously you are going to have to write off that sale as a bad debt, and that is going to increase your expenses, which will decrease the profits of the company. It will also have a negative impact on the liquidity or the cash flow position of the company because you won't actually collect the money from the debtor. So please note, you don't just state what you've been provided in the question. You start with that. However, in order to score marks, you need to explain why it is a risk. So if you explain why it is a risk, then you will be awarded the mark. Then we need to explain why currency risk is a risk. So again, we saw in the information provided that the company imports parts from China. So we said this exposes them to currency risk. So first, we are just going to write out exactly what we've been told in the question. They import parts from China, and this exposes them to currency risk. That will not score you any marks. You now need to explain why it is a risk. So why is this a risk? If the rand deteriorates, the cost of their imported parts will increase, and this could have a negative impact on the profitability of the business. So you must explain why this is a risk in order to earn your mark. Now please note, in this question, like I said, We didn't have to identify the risk. The risks were identified for us. We just needed to discuss why they are risks. In this question, we also didn't need to come up with a mitigation for the risk. So we didn't need to come up with different ways that the company can manage the risk. All we had to do is describe or discuss why it's a risk. So please note, you must read the required carefully when it comes to risk questions. Then just before we move on, we did identify one other risk, being financial risk. However, the required did not ask us to discuss financial risk in more detail, and therefore that was not included in our solution. If we then look at example 2, we have Penguin Limited manufactures swimming pool pumps. Parts are purchased from a single supplier in Pretoria. So we have a company making swimming pool pumps. They only have one product, which is definitely a risk because they are solely dependent on the sale of that one product. The parts are purchased from a single supplier. That is also a risk or a negative aspect for this company because they are solely dependent on one supplier. If that supplier goes out of business or if that supplier delivers late, it's going to result in lost sales for Penguin. Penguin finances their day-to-day operating activities with a bank overdraft facility, which bears interest at 3% above the prime lending rate. So this is going to expose the company to interest rate risk. If interest rates increase, they are going to pay more on their overdraft facility. So that's also a negative aspect. Remember, guys, we haven't yet looked at the required. We don't yet know what the required is going to ask for. So when you're reading through the scenario, you are just identifying positive and negative points. Then we are told that the company is investigating the purchase of a new manufacturing machine from a supplier in Germany. That is going to expose the company to currency risk. If we look at the required, identify and explain the risks facing Penguin Limited and indicate the ways in which these risks could be mitigated. So please note, guys, there are now 3 parts to the required. First, you have to identify the risks from the question. They are not telling you what the risks are. You need to identify the risk. Then you need to explain why it is a risk. So we're first going to identify the risk. Then we are going to explain why it is a risk. And lastly, we are going to indicate ways in which these risks can be mitigated. The first risk that we identified is that the company only sells one product. They manufacture swimming pool pumps, only one product. So we identify the risk. They have a limited product range. We then need to discuss why this is a risk. Explain the risk in detail. The company is solely dependent on the sale of swimming pool pumps. If demand for this product decreases, it could create a going concern problem for the company. And then lastly, we need to discuss how the company should mitigate this risk or how they should respond to this risk. And you are not going to find this in the question. You are going to need to come up with the mitigation on your own. So if the risk is the company has a limited product range, then in order to mitigate this risk or respond to this risk, they should diversify their product range. So instead of just selling swimming pool pumps, they should also manufacture and sell other products. Then they will not be exposed to this risk. What was another risk that we identified in the question? We saw that they purchase all of their parts from a single supplier in Pretoria. So that is identifying the risk. Parts are purchased from a single supplier. That comes directly from the question. Then we need to explain why this is a risk. They are reliant on a single supplier. So if the supplier does not deliver on time, or if the supplier goes out of business, this could result in lost sales for Penguin. So you clearly discuss why this is a risk. And then we need to say how we are going to mitigate or respond to this risk. And this is an easy one also. They should have additional suppliers of these parts. So don't only have one supplier, find alternative suppliers. The next risk that we identified was the fact that the company uses the overdraft facility in order to finance their day-to-day operating activities. So we said this is going to expose them to interest rate risk because the interest on the overdraft is linked to the prime lending rate. So we have interest rate risk, that is identifying the risk. Cash shortfalls are financed using the company's bank overdraft, and the interest on this overdraft is linked to the prime lending rate. So this is going to expose the company to interest rate risk if interest rates increase. How are we going to mitigate this risk or respond to this risk? We can hedge this risk either using an interest rate future, an interest rate option, or an interest rate swap. Guys, we are going to cover hedging a little bit later. We are going to look at the treasury function where we will cover hedging in a lot more detail. So don't worry too much about that for now. Then the last risk that we identified is that they were going to purchase a new machine from a supplier in Germany. So we said that was going to expose them to currency risk. So the machine to be purchased from a supplier in Germany, we can actually add here, this is going to expose them to currency risk. Now discuss in detail why this is a risk. This will expose Penguin to currency fluctuations between the South African rand and the euro. Then we need to recommend how the company should mitigate or respond to this risk. And once again, they can hedge this risk. They can use an FEC, a currency option contract, a money market hedge, a currency futures contract, or a currency swap. And once again, guys, hedging is going to be covered when we get to the treasury section of the syllabus. So in this example, we had to identify the risk, explain why it is a risk, and also say how the company should mitigate or respond to that risk. Let's look at one more example. In example 3, we've got Strubin Limited is a local supermarket group that is listed within the retail sector of the Johannesburg Stock Exchange. So we're dealing with a listed company. We know that that's a positive point because if they listed, they have easier access to finance. The company has undertaken an aggressive marketing strategy, which includes targeted promotional campaigns and the introduction of a loyalty program. The loyalty program entails offering customers discounts on subsequent purchases and has thus far proved to be relatively successful. Staff-related costs make up a large portion of the group's operating costs. Strubin Limited values their employees and they therefore train and develop their staff and offer them competitive remuneration. So both of these things here are positive. The company is obviously really trying to boost their sales because they have this aggressive marketing strategy, which includes two things. First, targeted promotional campaigns, and second, a loyalty program. So they are really trying to boost their sales, all positive over here. And also the fact that they value their employees, so they train them, they develop them, and they offer them competitive remuneration, that is also going to be a positive point. So if we look at the required for this question, for each risk indicated below, explain the current initiatives that are undertaken by Strubin Limited that will aid in mitigating the risk. Strong competition and failure to retain staff. Now, please note, guys, you don't need to identify the risks from the question. They have given you the risk. So they've already identified the risk. So if we look at the suggested solution, the risk of strong competition and the risk of failure to retain staff was given to us in the required. You don't have to identify the risk. You also don't have to explain why it is a risk. read the required carefully. You need to explain the current initiatives that are being undertaken by this company that will aid in mitigating the risk. So please note, in this example, when you are coming up with the mitigation, please don't sit and think of how you would mitigate the risk. The required isn't asking you to come up with the mitigation. The required is asking you to take the mitigation from the question. They are asking you what the company is currently doing in order to mitigate this risk. So please note, example 3 is completely different to example 2. In example 2 on the previous page, you had to come up with this risk mitigation because the required says indicate ways that these risks could be mitigated. You must come up with how they should mitigate the risk. In example 3, you need to explain what the company is currently doing in order to mitigate the risk, meaning that this must come directly from the question. So you'll see just below, I've said to you, in this example, you are required to explain the current initiatives that are undertaken by the company. So the attempted mitigation should come directly from the question. So for the first risk, so they are facing a risk of strong competition. What is the company currently doing in order to mitigate this risk? Well, we know that they currently have undertaken an aggressive marketing strategy, which is made up of a targeted promotional campaign and also a loyalty program. So obviously, guys, that is what the company is doing in order to address the risk of strong competition. So if we look at the solution, the company has undertaken an aggressive marketing strategy where they have targeted promotional campaigns and they also have a loyalty program. Now, please note, if you just write that, you are not going to score all of the marks because you are purely just writing what you are given in the question. You can't just regurgitate what's given to you in the question. You need to discuss it in a bit more detail. So you need to say, how is this actually mitigating the risk? So how does the targeted promotional campaign mitigate this risk? The risk is mitigated because these campaigns are likely to increase brand awareness, and this will lead to an increase in sales. For the loyalty program, how is this going to mitigate the risk of strong competition? It is likely to secure customer loyalty by rewarding customers for their return business. And we were actually told that in the question, that with the loyalty program, customers are given discounts on subsequent purchases. So what you're doing with this loyalty program is you're trying to ensure that your customers come back to your shop so that you have repeat business from those customers. Then the next risk that we were given is failure to retain staff. So what is the company currently doing to try and mitigate this risk? Well, we know that they value their employees, so they train them, they develop them, and they offer them competitive remuneration. So if we look at the solution, by training, developing, and offering their staff competitive remuneration, so that comes directly from the question. You're not going to be awarded marks for that because you're purely saying what's in the question. You now need to discuss that in a bit more detail. So now, by doing all of that, they are trying to maintain high employee morale, which is likely to reduce staff resignation rates. So obviously, if staff are happy because they are receiving competitive remuneration, they're being trained and developed, they will then stay with the company, which means the company has then addressed this risk. All right, so guys, please go through these last 3 examples so that you are comfortable with the different ways that risk can be tested. And that then brings us to the end of this lecture. Thank you.